Time now for Financial Friday on WOMI with your host, Drew Watson, sponsored by Align Wealth Management.
For the ones who work hard to ensure their crew can always go the extra mile, and the ones who get in early so everyone can go home on time, there's Grainger, offering professional-grade supplies backed by product experts so you can quickly and easily find what you need. Plus, you can count on access to a committed team ready to go the extra mile for you. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
Rainmaker Incorporated.
Hello and welcome to Financial Fridays, Friday, March 10th, 2023, brought to you by Align Wealth Management. I'm your host, Drew Watson, Private Wealth Advisor with Align, and boy, do we have a good show for you to end a week that's been a little bit rocky, to say the least, especially for Dow stocks and the S&P, as we try to double up on winning streaks, and doesn't look like it's going to happen this week, folks, as Jay Powell has really thrown a wet blanket over the, I would say, embers of a early year 2023 stock market rally with his pledge to keep raising rates as long as it takes. Look at the numbers. As you know, the Dow's had kind of a horrible week. We've had 2 times down over 500 points during the week. The benchmark 10-year Treasury did close under 4% Friday. We had crude oil in around the $77, $78 range. Gold was up. It caught a bid up about $15 during Thursday's trading. Lumber, our commodity du jour, is back around the $415 per 1,000 board feet mark. And natural gas, which is our new commodity du jour, down back to around $2.63 on how that's measured. As I said, we've got a great show for you today. Stay tuned. We're going to go over your questions. We're going to take a deeper dive looking at inflation and implications on that it could have for you and your family and your financial goals. Keep listening to Financial Fridays, brought to you by Align Wealth Management. We'll be back in 60 seconds.
What do you want to do when you grow up? When we were young, it's a question we were often asked. As we get older, our passions become clearer, our pursuits become careers, and if we're diligent, we begin to plan for the life we want to live. That's why at Ameriprise Financial, we ask, what's most important to you? Starting with our Confident Retirement approach, your Ameriprise Financial Advisor will ask questions that will help you arrive at a customized plan that can help you realize your goals today, tomorrow, and throughout retirement. With the right financial advisor, life can be brilliant. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, Inc., today at 270-684-8424. That's 270-684-8424. Office is located at 2708 New Hartford Road in Owensboro, Kentucky. The Confident Retirement approach is not a guarantee of future financial results. Investment advisory products and services are made available through Ameriprise Financial Services, Inc., a registered investment advisor.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, Private Wealth Advisor with Align. And as we came out of the end of last week, which we broke a losing streak that had been about two and a half weeks in the making, this week, let's take a look at kind of some of the highlights that we've seen over the last 7 days. Now, specifically speaking, as I said, the S&P 500 was up almost 2% last week and finished above the 4,000 level, which a lot of people feel is a very crucial support level in the S&P. And keep in mind, when looking at investments, you want to see higher highs and higher lows, whereas most of last year what we continued to see was lower highs and lower lows all the way into September and October. So looking at kind of some of the highlights last week, U.S. Treasuries, their prices were mostly weaker, and the 2-year yield was as high as 4.97% a week ago Thursday, before pulling back a little bit at the end of the week and finishing at 4.8. And as you know, after the show was on Friday, there was a pretty big rally to finish the week, and the 10-year Treasury went out at around 3.96%, and the 10-year and 30-year yields spent most of last week above 4% for the first time since the fall, and that could act as a key psychological level over the coming weeks. On the macroeconomic front, Fed speak from the Atlanta Federal Reserve President Ralph Bostic, who's a non-voter, says he favors a 25 basis point Fed funds rate hike in March, and that helped to ease some of the investor fear last week that an outsized rate hike in March of perhaps 0.5% would be in the offing. Nevertheless, Mr. Bostic said he's also open to a higher terminal rate than his current outlook of 5 to 5.25%. That said, Federal Reserve Governor Christopher Waller noted last week that if inflation data remains hot, the policy rate will have to move higher than the current forecast. This is definitely mixed messages and can spell additional volatility ahead. Regarding economic data, ISM manufacturing activity in the U.S. remained in contraction last month, coming in a tick weaker than expected. However, February ISM services activity remained firmly in expansion, with data components showing a new orders up and prices paid moving lower. While strong sales activity, easing cost pressures, and improvements in delivery times can be viewed economically as positive, the upside surprise for the services data adds to a string of hotter than expected economic activity. As such, the Fed may keep pressing the rates higher through the spring. Now, some of the bigger news that you may not have followed last week was China's rebound from the post-zero COVID has been stronger than top leaders in the Communist Party anticipated. For example, official manufacturing PMI for February saw its largest improvement in over a decade, while the top 100 developers in China saw an increase in sales for the first time in 20 months. In addition, China's annual parliament session opened on Sunday. At the meeting, the National People's Congress announced in 2023 a growth target for Chinese economy. Now, despite stronger reopening trends over the recent weeks and months, officials set China's 2023 GDP target at around 5%, that's in line with the 4.5% to 5.5% range government advisors recommended in November. And we'll just have to see if this might be under-promising to over-deliver or not. Now, across the pond in Europe, the Eurozone core inflation rose about 5.6% year over year in February, as both core goods and core services reached new record highs. Headline CPI, which includes food and energy, rose 8.5% year over year, a tick lower than January's 8.6% rate, but 0.3 of a percentage point higher than the forecast of 8.2. Eurozone unemployment remained steady at 6.7% last month. The still hot inflation environment could lead the European Central Bank to keep tightening rates aggressively. Short-term interest rate futures last week pegged the ECB's deposit rate, topping out at 4%, or the highest level in the Euro's 24-year history. Now, that is something. Back here, after stocks raced off to their strongest start in January since 2019, the S&P 500 index ended February lower by 2.5%. Declines in February were sharper across the Dow Jones Industrial Average, down 4.2%, but more modest across the tech-heavy NASDAQ, which ended February lower by just 1.1%. Notably, after hitting 4,200 on February 2nd, the S&P 500 spent most of last month moving lower as bond yields climbed. Inflation data came in hotter than expected, and markets adjusted to the idea that the Fed funds rate is likely moving higher for longer. That said, the index remains higher by nearly 16% from its October 2022 low, despite market expectations taking the Fed's terminal rate up to 5.4% last month and basically cutting out any chance for a rate cut in 2023. Behind the scenes, earnings estimates for the first quarter darkened, with analysts now expecting the S&P 500 earnings per share to decline in both the first and second quarters of the year. The bottom line, it appears the path of least resistance for stock last month was lower, with the bearish narrative firmly in control of momentum as the calendar turned to March. Now, typically, and historically, the S&P 500 has produced an average price gain of 1% for March over the last 20 years. Now, speaking a little bit more in detail of the S&P 500, a lot of people are focusing on the 4,000 level of support in the S&P 500. Specifically, that's kind of a big psychological number. Now, we kind of hit a bottom October 13th in and around 35.14, and some market watchers have called for a retest of that level, which, if we did that, we would be looking at a decline of roughly 13%, but certainly breaking out above the 200-day moving average for an extended time hopefully will reverse that trend. If you're looking for upside, I think depending on who you read, you may have to go back to the, lofty highs of last April where we were about 45.12, right around the 21st of April last year, for maybe where our ceiling is on this rally. But certainly what we want to start seeing if you're long stocks is higher lows and then perhaps higher highs. Those would all be setting us up for maybe a better situation as we go into the week. So with that said, keep an eye on Europe because they have set the highest terminal rate that we've seen since the Eurozone has been created. And we've got we've got an employment report this week, as well as earnings for more of the S&P 500, and just kind of watching where numbers are, especially a lot of numbers coming in with a PE ratio, I'd say for consensus, a forward PE ratio of about 17.83, whereas historically the average is about 15.5 going forward. So we'll continue monitoring this because so you don't have to. Keep listening to Financial Fridays right here on this station, and we'll be back after a word from our sponsors.
When today is unpredictable, you need sound advice and strong support to help you stay focused on your long-term financial goals for tomorrow. Ameriprise has been guiding clients through challenging times for over 125 years. You can take comfort in working with an advisor who's backed by that strong experience and who's there to guide you with personalized, goal-based financial advice. Together, you and your Ameriprise advisor can plan your future while navigating your now. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, LLC, today at 270-684-8424. That's 270-684-8424. Offices located at 2708 New Hartford Road in Owensboro, Kentucky.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, private wealth advisor with Align, and in our financial planning segment this week, we're going to take a deeper dive on tax preparation and getting your stuff together, so to speak, to make sure your tax filing is as orderly and timely and most importantly, less stressful as possible. One of the things it's an ounce of prevention is worth a pound of cure is one of my favorite sayings, and definitely when it comes to taxes, that's the case. So sometimes you can't prevent tax liability from occurring, but you can prevent the stress of running around trying to figure out what you may owe. So if you know, first and foremost, you have kind of a outside the ordinary tax event happen. Let's say you sold a piece of property, you sold a business, you took a larger than amount out the normal from your retirement plan, or you had a spouse pass away the year before and you're going to be filing different. No matter what it is, it never hurts to go to your certified financial planner, your CPA, your tax preparer, and say, hey, this happened. What do I need to keep? How much money do I think I need to put back? Don't ask them for a specific answer of how much you're going to owe. Ask about what do I need to do to have everything set up and have a ballpark idea of the potential liability coming out of this. Because truthfully, you won't know exactly what you owe until everything is put together in your tax packet. But a tax professional can give you a ballpark idea and certainly tell you for sure what documents you need to go ahead and keep together. Now, if you're like me, you can put something back in early March in a year, and when it comes to the following April, you may not be able to locate it. So use a tax binder where you can put all of your important tax information throughout the year into that binder. If you make contributions, let's say to Goodwill, St. Vincent de Paul, additional contributions to your church or favorite charity, go ahead and jot down a note or whatever paperwork they may give you at that time to put in your tax folder. Now, a lot of people think, well, automatically they're going to send me an update on what I contributed. Sometimes that may not happen, and you're on your own to kind of remind them, hey, I gave you this back in February or March. So definitely keep in mind that an ounce of prevention there is worth a pound of cure. Now, it's also a good idea to keep track of items that may be or may not be deductible, but you think are important. Now, the tax law has changed a lot since 2017, and certain items that used to be able to be used for itemized deductions, I should say, now that bar has been raised quite a bit. But if it cannot be used for federal deduction purposes, some items can be used for state deduction purposes. So don't disregard those. Keep that together in your important financial file or tax file or whatever you want to call it. And therefore, you can have that at your fingertips the minute that you might need it when it comes time for filing. Also, any adjustments to income, obviously, keep track of those items. If you've got changes to your health insurance or you've had a health event where you are spending a lot of money, keep track of those items as you write checks or take money or put money into an HSA account, etc. Because you would rather have too much information than not enough substantiation when it comes to claiming deductions or other items on your tax return. If you're in a profession where you have to spend some money out of pocket for that profession, definitely keep all those records, and your tax professional can advise you whether or not those can be used for deductibility purposes. Now, if you have your own business or you have a side business that's taxed, let's say, as a Schedule C sole proprietorship, you should know by now that more records are required of you than just a normal ordinary filer, including probably making estimated tax payments on a quarterly basis. And those payments typically are due April 15th, June 15th, September 15th, and then January 15th. Now, if you've heard those dates, April, June, September, January, those are not all exactly 3 months apart. And no, I do not know why the IRS set that up. You'd have to ask them. But certainly you want to keep probably a whole separate file organization system for any business that you have on your own. Now, one thing that is going to be more interesting this year is the IRS has set different limits on who's responsible to get documents if they've been paid electronically on a surface such as Venmo. And I think the threshold is now down to $600. So this may bring into the fold babysitters, yard mowers, dog walkers, what I would call people of all stripes just earning some extra money, not even a side hustle, but it might be somebody's first job, and what is that going to do as it pertains to making sure they file taxes and claim their income. Now, that's a head scratcher, and that's a discussion for you and your tax advisor, but keep in mind, bring that up because the rules for that have changed dramatically over the last few years, and depending on where you live, there may be certain income thresholds that require you to have an actual business license for either the county or the municipality that you live in. If you know me, you know I grew up in Harrisburg, Illinois. I used to cut a lot of yards, but as my dad would say, it's kind of a one-horse town, and sometimes the ferry lands, you couldn't get your car out on Poplar Street. But a lot of one-horse towns now have figured out they can scrap up some extra money to feed that horse by placing business license requirements and local income taxes on people cutting heads of hair, mowing yards, taking dogs for walks, helping little old ladies clean leaves out of their gutters. You name it, municipalities are looking for it. So keep that in mind when it comes time to filing your taxes. You're listening to Financial Fridays right here on our favorite station, brought to you by Align Wealth Management, and we'll be back after a word from our sponsors.
What do you want to do when you grow up? When we were young, it's a question we were often asked. As we get older, our passions become clearer, our pursuits become careers, and if we're diligent, we begin to plan for the life we want to live. That's why at Ameriprise Financial, we ask, what's most important to you? Starting with our Confident Retirement approach, your Ameriprise Financial Advisor will ask questions that will help you arrive at a customized plan that can help you realize your goals today, tomorrow, and throughout retirement. With the right financial advisor, life can be brilliant. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, Inc., today at 270-684-8424. That's 270-684-8424. Office is located at 2708 New Hartford Road in Owensboro, Kentucky. The Confident Retirement approach is not a guarantee of future financial results. Investment advisory products and services are made available through Ameriprise Financial Services, Inc., a registered investment advisor.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and this is the famous email bag segment of our show where we answer your questions as it pertains to financial planning topics and all things financial. Now, one of the questions that have been coming in the most over the last months after months is kind of the commodity prices, especially when people go to the grocery store. What in the world is going on with food prices, etc. And, this might be a good time to kind of go through some of the chain as it pertains to food production, especially in the U.S. Now, if you're a farmer, you're going to know that I have kind of short-circuited some things here, but this is the, there was a series of books, Everything Under the Sun for Dummies, network security and networking for dummies. I've even seen, basically joining the Catholic Church for dummies, how to build a rocket for dummies. So this is the Cliff Notes version of kind of what's happened, but essentially a lot of our food costs that we're seeing now is the end product of a lengthy train of price increases. So, something that we often quote here is the price of kind of live cattle. That's typically quoted per 100 pounds of cattle. And, earlier this week is about $166 per 100 pounds. Now, if you take a look at what makes that cow weigh over 100 pounds or weigh how many ever pounds it weighs, is it's got to be eating something. And in the U.S., I know grass-fed is the marketing name that a lot of manufacturers are using to try to get more money out of their beef. But essentially, at the end of the day, a lot of cattle here is fed corn, and corn prices hit their high, $8.20 a bushel or close to that back in May, hit a low below $5.80 at the end of July, and now was trading about $6.64, under $6.40 this week on corn. But corn just doesn't come out of the ground by itself, and corn does take typically more fertilizer than other types of crops. And the main stock of fertilizer, or what you make a lot of fertilizer out of, is natural gas. Now, natural gas prices earlier in the week were at $2.69, but going back to September, we were flirting right around the $10 per billion cubic feet of natural gas, which is not only an all-time high, but it's an all-time high. So obviously a 73% plus runoff in gas prices over the last 6 months will hopefully be plugged into lower fertilizer prices this coming planting season, which would hopefully translate to lower corn prices, which would translate to lower beef prices, which eventually should translate into lower prices when you go to the grocery store and or finished restaurant. Now, a lot of things in our food chain operate that way, and maybe the opposite of beef, as I said, has been hogs. So, live hogs earlier this week were about 83 and change per the weight that they trade on, off their lows at the beginning of February, which were around 77. But unlike cows, which might be called more finicky eaters, hogs will eat just about anything. So I think, the cheaper the feed going to hogs have definitely made their prices quite a bit lower than beef, than cows. And some of that might be the direct impact of what cows eat. Now, you can go through the food chain for other commodities and different things, or why eggs are as high as they are, and et cetera. Some of that has to do with not only one, but two Asian swine flu breakouts here in the United States in a 12-month period, which by and of itself is certainly something that's unusual and therefore not thought to be a extended condition when it comes to prices, let's say, for eggs across the board. Now, obviously, depending on where you live in the country, you're probably seeing different prices on different days, and it all depends on what what you eats, or what it takes if you're a vegan to produce the plant that you would have on your plate every night. But I do think probably an unheralded message is going to be the fact that natural gas prices have come back to their pre-COVID levels, should eventually help our food costs get back, probably not as cheap as they were before COVID, but certainly less expensive than they are now. And one thing before we kind of get off of this subject is that, people have been making choices, and it's clear to see when you look at data from Walmart, Kroger, Costco. Private label merchandise across the board has seen a dramatic increase in sales, and that tells us that all consumers are definitely shopping, and they are looking for lower price alternatives than what they may have been seeing from their name brand counterparts. Now, at the end of the day, a lot of private label merchandise is made at the same factory that name brand merchandise is, with maybe just some minor changes. And therefore, you may not see a big change in earnings from the manufacturers. But keep in mind, people are voting with their wallet, as they say, and what they're voting for is lower prices. To quote one of the boxers I'm familiar with in Spanish, no más, no more high prices. So keep listening, because we'll be back same time, same channel next week for Financial Fridays, brought to you by Align Wealth Management.
This program has been paid for by Rainmaker Incorporated.
This is WOMI Owensboro, 99.1 FM.
For the ones who work hard to ensure their crew can always go the extra mile, and the ones who get in early so everyone can go home on time, there's Grainger, offering professional-grade supplies backed by product experts so you can quickly and easily find what you need. Plus, you can count on access to a committed team ready to go the extra mile for you. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.